Stick around.
Welcome to the post-market show. It's a wild one. Thank you very much there, Obi, for taking it down and getting us into the close here. Stepping up from my man Sean, I'm going to be stepping in for him today for our market recap show. And what a wild day it was. Clearly, you had the holiday trade. Which was a little bit less volume. We had some runners, but then today was all of retail. It was all the chips. It was the buy now, pay later. It was the squeeze zone. So look, we already know about all of that stuff, but I want to get into the market recap almost right away. So shout out to everyone that has joined. I'm going to let people sort of matriculate in here, and then when it starts to bump up a little bit, which it is right now, let's go. Shout out to Adara. Thank you very much for that on the bell. But we didn't talk too much about what was going on with Treasury today. There was one reference to Treasuries early on because it was shouted out in the chat. And if you look at, and we always look at the ETF board, number one, tippity top of this board is going to be TLT, Dynamite. Not like Jimmy Walker Diamond, Dynamite. TLT, baby. Up over 1.5%. Now, clearly the market had a decent run, but into a flat day. So you have this bounce happening in Treasuries, and it's been a good one. It's still a bit consolidative off the 90 level, but you are seeing some signs of continuation, which would generally be pretty good for the overall market. I kind of joked around Peter Schiff would have a good day today because the metals did well. You had gold and silver making big breaks. Gold crushing that 2,000 level once again and getting back into the upside. So from the bigger story for me would be TLT breaking here, back out on the daily. I think that's what we want to watch. If you're looking at retail, it's interesting because real estate, this is, okay, like I don't want to be like pessimistic or anything, but if we're actually going to start breaking out on the real estate ETF, that gets a little bit spicy to me. I'm surprised this is having the strength that it is, but you're still in a consolidative phase. It actually broke out the top of that today and then closed right tippity top. So I don't know that this is breaking out yet, but it's getting pretty darn close to it. And then if you go down the line, it gets a heck of a lot more boring. Like most of everything was basically flat. Which is a little bit surprising because I think if you're like your perception of the market today, the way that some things were running, could have been that tech did better than it did, but we really did not. It just was not that strong. The Qs was dead flat. This was a flat market day, and when you have that kind of a setup, you want to be very, very laser focused on the right types of plays and the right types of moves. If you see me look to my left, I'm just going to keep watching to see if I have anything on Zscaler. Going to be looking down for them as well. I haven't really seen anything for their earnings. And if they move after market, I'll let you guys know. They're the only earnings name that we are going to be watching. We do have the NOS boss coming through for Trader Talk a little bit later. So let's talk a little retail. And I went back and forth for talking trade review, what we should go over. And I guess I spent a lot of time explaining why I was wrong about Coinbase, but I want to get back to Affirm because it wasn't my number one stock today. Shopify was. So Shopify was because I stuck to it a little bit better. Amazon was good because I stuck to it a little bit better. Affirm should have been number one, right? Like there's no question about it. Affirm set you up for the perfect scenario today. You had Black Friday, 47% year over year, more people using buy now, pay later. So all that strength that you got in retail and the consumers and all that good stuff, well, guess they're kicking that can down the road a little bit more than they were last year. That's good for Affirm. I'm not going to say anything about the deals they had at zero interest and whatnot and how that works out for them, but if they're bringing people in, that's good for them in general. The price action is what we care about here. The 20% short float is what we care about here. So 20% short float, catalyst, sector moving, big massive top here on the daily at 27 even. I mean, if you weren't looking at the 27 even top on Affirm, then I don't know. Like you don't like breakouts. It's that simple. If you're not a breakout trader, you're not a breakout trader. I'm not here to tell you what to do. But this is 27. I'm going all the way back to September 2022. That's $27. Then you go back into September. That's $27. Then you go back here, $27, you broke it out. Once you were above that level, I am looking long until resistance. Now, the big resistance level was actually above 30 at 31. We did almost get there, and I don't want that to look that way. Let's go snap it back in, make that look a little bit better. We did get back there in the general sense. That 27 entry point, however, this is where it gets a little bit dicey, because if you saw the show today, I was long the breakout of the pre-market high. So if I like 27, it's like, why were you not long in this 27 dip? So that's mistake number one. Now, obviously, the breakout here at the pre-market high was still a good trade. It's still good to be long this breakout. It's not like that's a bad trade. But if I just showed you how big a deal 27 even was, and we're above that price in the pre-market, look where we dipped to. At the open, we dipped right into 27 even, almost on a dime, and then it goes grip and rip. That's a trade that you can have. Now, I'm going to acknowledge this first and foremost. Even if I get this trade at like 27.10, my stop is very tight here. I'm probably at best giving this to like 26.80. Maybe I want to extend it to 26.60, but I'm using one of those two stops if I take a 27 long. I don't think you can take this, I wouldn't take this trade if I was stopping out at 27 even. It's just way too tight of a stop at 9:30. It just doesn't work. There's way too many times where you're stopped out and then it's running 3, 4, 5% in the money for you to use an even dollar stop. So if I'm taking that trade, I'm stopping out at 80 or 60. It's one of those two for sure. Now this ends up working and giving you everything you want, but that's only half of the story. We talked about that next level up, and it's going to be that daily. It's going back over to the daily. This will be a 30. I'm just going to switch that back to the daily chart for you guys. And when we zoomed out on that daily, you got to that 31 level on a firm. And that goes right back into here. It's the only significant price area. And this close, that's too far. Come on. There we go. That's too far. That 31 level is still the big level. That's all the way back in here. There we go. You didn't quite get to 31. Now, if there was a mistake that I made shorting, I anchored myself to an even $1.30 level instead of looking off of that 31 and being patient. If the resistance on the daily is at 31, yes, 30 is a big psychological level. It's also a 10% move from 27. I love that symmetry, but I've got to give it the room to break 30, and I didn't do that. So just going back from the daily, I'll pop this to a 5-minute. Just want to look at this on a lower time frame so you can see what happened. Was 30 a good level on a firm? Undoubtedly. There is zero question that this was a good level because you can see the wicks on the chart above that 30 level. I don't know if we can zoom in on this. Can we full screen? There we go. We can full screen it. Look at 30 and how good a resistance was. However, overhead on the daily, 31's that top. So it's breaking it. It's getting fills above, the money fills I like to call them. When there's overhead resistance on a higher level when you have a popular breakout price like a 30, then sometimes the money fills are getting short above 30 even before it gets to that 31 level. That's what the stock was telling me. I still shorted it underneath and stopped out. And this is a lack of adjustment on my part. So yes, I was right about the $30 level, and it gave you a wicked pullback, a great pullback. Wicked. What am I, from Boston? But the best play, and when I see this happening, this is your adjustment. On a 5-minute chart, that's 1, 2, 3, 4, 5, 6 times. That's a half an hour. For a half an hour, it is breaking 30 and failing 1% higher. For a half an hour. Now, you might not make that adjustment in the first 10 minutes. However, if you like the short off of that level, at some point you have to adjust the strategy. You're either taking the fill at 30 and giving it at least a 30 and a half, or you're taking the money fills above on the wicks if you like it, and if you want a tight stop, you're having to short it at 10s and 15s. Sometimes that's what the move is. When you look at a key price level, you have to be willing to trade it in multiple levels, in multiple ways. Sometimes resistance holds, it gets to 30, you short 29.95, and you just win. Other times, the price action's telling me there's still weakness here. The move is stalling out, but it's getting above that 30 level, and I've got to be able to find an entry or a trade strategy which allows me to hold it a little bit better. That would be shorting the money fills above 30. That's what would have worked over there on Affirm. I see some people in the chat talking about other setups like that. And Zscaler did come in here. Now, I thought, okay, so Zscaler is getting its you-know-what handed to it here. But when I'm looking at this, I'm looking at Benzinga. I was just looking online as well. I mean, they beat on the top. Revenue also was a beat. The guide, I mean, unless I'm seeing the guide wrong, the guide wasn't bad either. The revenue guide was higher. So, okay, again, price action in the aftermarket doesn't have to make sense. Let's get this out of the way. They beat top, I mean, I see a beat top bottom, and I see a guide that's beating the top end of the range. So as to why this wants to be trading down, it doesn't matter. That's what it's doing. So if you tee it up here, this one is getting absolutely shellacked. I just want to pop the daily chart back up for Zscaler so we can get to this for a second. Sometimes we care about where the stock is gone, and that could be the bigger issue here. So Zscaler was in the midst of a potential breakout, kind of a double top there on that daily, and you could just be seeing a rejection of that. We've seen that this earnings season, you've been seeing a heck of a lot of that. So it's going to be very important if it can't hold this 180 level on the daily, like that lower high, kind of this start of the consolidation going into this top. If it doesn't get back above 180, that could be nasty. That said, this move to the downside does set it up with good earnings. When the earnings are good and you get quadumped like this, it does set you up for some bounce plays the next day. Like you get back into this 50 in the 170 area, that looks good. You look back into 175. There are fantastic bounce zones where you can find something which is selling off on profit on a decent quarter and get a bounce zone. Walmart gave you that at 154 at the 200 period moving average. So that's what I'd be looking for there on Zscaler. We do have the NOS boss coming up in just a second, but there's one more thing I wanted to do on Zscaler, which was when you're thinking about the long term, always pull up the weekly. Or like I like to lean on the weekly when I'm going pretty far back. So when I was telling you guys just now, hey, maybe it's a story of where this thing has come from. Well, on the weekly, this is significant resistance underneath that $200 level. Very, very significant. So pull back off here, even on good earnings, leaves the bounce intact on this stock on the weekly. This could, I mean, if it closes above 170, it looks pretty good still in terms of being a bullish move. Heck, it could get all the way back to 155, and it's really not all that bad either. So certainly a decent move here for Zscaler to the downside, but you have to be able to keep things into perspective. Now, when I want my perspective on things that are not day trades, well, all of us pretty much, and we do this twice a week, we go to the NOS boss himself. And I do believe we have him here. So, oh, not yet? Oh, no, you're killing me. Now I've led into it. I've built him up. Now he's all excited to get on here and wax poetically about some swing ideas and what the overall market is doing. But we'll get there in a quick second. Just so you know, Zscaler is continuing. We're still falling here. Just let me go back to the 3-minute here for you guys. It is not. A lot of times in the post market, you get that rubber band action. Well, that rubber band's broken because we're not bouncing above 180. I don't know what time the call is, but suffice to say, they better start saying something good on the conference call tonight, because when I see a move like that on a top and bottom beat and a good guide, I'm usually expecting to see a little bit more of a bounce play early on. I still think it has a chance to bounce, but if you're trading this, I think you would have looked back at 175 and said, okay, well, it bounced in front of that. Where is the move above 180? And you were just not seeing the move above that 180. So yeah, I see you in the chat there, Deeves. Now, I haven't dug into the report. I see you saying higher operating expenses, less cash flow. Entirely possible. There is certainly, look, there could be something in the report. I'm just looking at the top and bottom in the guide here, guys, live. But there easily could be more in the report that accounts for it. Another fantastic point, Jennifer Schultz pointing out in the chat, look at PanW. Palo Alto did a similar thing as well. So we do understand, in a general sense, we've been getting a lot of this in earnings season, but then remember what Palo Alto did in its ability to bounce off of some key levels after it had a bit of a disappointment. And it wasn't necessarily the quarter, It's about where the stock has come from, and that can lead you to where it's going to go. When you're at those highs, sometimes it's just not good enough, and they pull back in. But let's get on over to Trader Talk. Am I hitting it or are you hitting it? I'm hitting it. With our main man, welcome, Michael. First off, how was your Thanksgiving long weekend?
It was fantastic. We actually had our little parade of lights here yesterday, so I was able to take the little one out to see Santa, and I think that kind of kicks off the Christmas season right there.
Oh, that is the absolute best. My neighborhood does we have a little side street, and every single year there's a Christmas market. People sell stuff on it. They close it down. The mayor comes by. They had the fire engine. The fire department comes. It's great because it's literally 100 meters from my house where they do this. And so she got the picture with Santa. That's the best. I love the Christmas time of year. But
Absolutely, especially when you've got little ones around. We get kind of old and we're like, oh, we gotta who get this for this person, that for that person. But it all kind of goes away when you watch a little kid and they're excited to see Santa. And mine's only 2, so he doesn't even know why he's
oh,
excited to see Santa. He's just seeing him everywhere and getting pumped every time.
that's the absolute best. I don't know who you calling old. Yeah, I don't know where you're going with that. You're barking up the wrong tree there, Michael. But so look, today was a bit of a wild. It was a wild one. Like this was not. It was a relatively flat day for the overall market, but then you had these little like pieces in and out where things were absolutely insane. So like, where do you start with a day like today? Like it was. I mean, the retailers was crazy. Obviously, we saw a little bit of a piece of that, and the chip names did a little bit of a move. Overall, you had the metals do okay as well. Gold, if you're looking at gold was fantastic. But where do you start on a day like today where it seemed like the overall market wasn't giving you that much?
Well, first of all, when I was watching in the green room there, and you're absolutely right. You zoom out, right? So I have a zoomed out chart of the S&P 500 right here, and I've kind of highlighted this area right up here at this high. We broke that last week sometime, and these kind of inside do nothing type days, it's kind of exactly what you want to see. And the reason for that is the RSI I have here on the bottom. You can pick your overbought, oversold indicator of choice. I don't really think it matters, but there's 2 ways an overbought condition can alleviate. One is through price, which means a pullback, and the other is through time. And as someone who is very long, and we got long around this area, I want to wait. I don't want it to be price. I want it to be time. So if we get another handful of days chopping around just like this, I think we're just building a launch pad to go higher. And this is would be technically a little bit of a reversal of the trend. You can see the nice downtrend we've had here as well. But it's not really a change in trend when you have just a big spike like this. We need to see either what happens on a pullback, like I talked about there, or if we can consolidate a little bit higher and then break through. That would be very interesting because then we're talking about maybe new all-time highs by the end of the year, which would be a very Merry Christmas, I think, for a lot of people out there.
Speaking of Merry Christmas, now this is going to be, I love putting you on the spot, A, because it's fun, we're live, you don't have a choice but to answer my questions. You just love that power. But you just said rally into Christmas. Now, we had a lot of talk, and again, a lot of people have been talking about the Santa Claus rally and what it is or isn't statistically. Okay, so the school of thought, from what I've read, was like the last part of the year, and then it actually bleeds into January. But if we're just talking about a rally into the end of the year and sort of seasonality, what is your take? Because look, you're a swing trader, you deal in higher time frames. You're now talking about potentially you're already long, you're looking into a push here at the end of the day. Now you're looking at the chart setups. Do you even care about seasonality, or is that just like, nah, the charts are for me. I don't care about seasonal patterns.
I look at seasonality the same way as I look at, indicators like a VWAP or a MACD or whatever it is. It can confirm or disprove an analysis I have, but in and of itself, it's not an analysis. I would never buy something because it's a seasonally strong period or something like that. But if I see a nice pattern and a nice uptrend and it's a seasonally strong period, then I think that just kind of gives me another check. Maybe take a little bit more size, have a little bit more conviction in my trades. What I think is very interesting is the periods in which we don't get whatever is very strong seasonally to happen. And an example just off the top of my head is, I think it was 2018 during Christmas. And I know you would have traded through this, Neil, so you would have remembered it was an absolute collapse. It just into the end of the year. I think it was either trade war talks or interest rates or something was going on at that time. And those, in my opinion, are really interesting. If you have a seasonally strong period and then you have the market completely collapse, I think that is more interesting to me than when something does what it should do around a seasonally strong period of time.
You know what? Okay, now you just have me like wanting to think out loud because I've never thought about that, but it's much more interesting, right?
Hmm.
Like if you like sure you can have confirmation. Confirmation is fantastic. Like, okay, fine, you were looking for longs anyways, statistically, blah blah blah. You've got the Santa Claus rally, and it corresponds with a breakout trade or something that you were already going to do. But those times where things go vastly against what people are expecting are probably going to give you a little bit more of an alpha in your trade there. So I like that. Like every now and then, see, I put you on the spot, and then we just got a good nugget that I think maybe you don't get to trade. Look, when you look for outlier events, they're not going to happen as often, but when they're
Yeah.
there, they're going to give you bigger opportunities. So, that's what it's
Well,
all about here.
yeah, and just think about it in terms of how you guys trade with support and resistance and levels, right? If you're like $10 is a really big level on this stock, I think if we get there, we should probably fade off it or rest for a period of time there. But then it just blows through that level. That is, not you weren't wrong. You had a level and that was interesting. But to me, that's really much more information. That means this really strong level that you thought would act as resistance just got destroyed. Maybe that is a better signal of, okay, this stock really has legs or some sort of big buyer in it because it didn't do what it, quote unquote, should have when the market got to that level. So that's always what I look at is, hey, is this a unusual event that I don't think should occur? Well, that's really where I want to focus my time. But right now, again, if we get that, if we don't end up breaking these all-time highs and we collapse from here, that would be not fun because I'm long. I'd have to get out of some positions, but that would
Yep.
be very, very interesting to me going forward into next year.
Yeah, we've been pretty bullish, right? So
Yeah.
the gold has been obviously having a good time here. I know you've been a proponent of it. I've said time and time again, I've traded GD as a day trader. I've traded some moves in GDX, but the
Mhm.
context of that has generally been around like a Fed day or something. And okay, GDX is what I was playing with on the Fed instead of the Qs or an individual stock. So my knowledge in that is I can look at a chart, but the move that we've seen right here in gold. Give me your thoughts because are you still feeling bullish on it? Like, what are your thoughts? Obviously we just got through 2000, so it's kind of a maybe an easy answer for you.
Yeah, more bullish than ever. So if you go to my screen here, this is actually I like teasing things that are coming out very soon for your listeners. This is actually on the downloaded application. We already have these heat maps on the web version. You will be able to turn any list, any symbol list that you have, or any top list that you have in trade ideas into a heat map. So what I've done is I've taken these are most of the ETFs I keep an eye on during the day during a heat map, and you see a pretty consistent theme here, which is why I love visualizing this data this way. We have GDX, we have SLV, so those gold miners, they're silver. XME is mining metal, all of this stuff, and then gold. So all of these are doing really, really well. And then I did a kind of a zoomed out as I was just doing my end of day recap here. But I did this zoomed out look on gold, and you can see this level. If we go back, this is all the way till August 2020. Call it, the $200 area, give or take. We've hit this 4 times now and got rejected pretty violently from it. So this kind of, I guess, cycles back to what we were just talking about a few seconds ago. If we expect that there's going to be resistance at this level, and all of a sudden there's not, and we blow through, that will be a key to me to get a little bit longer, even though I'm already pretty long gold as it is.
Ooh, I like that look. I mean, again, we just talked about it, and I see that setup. That's a lot of tops at the same level where people are expecting resistance. And a lot of times, I always say this, the more times you get to a resistance level, if I'm shorting it, the less I like it. It's just the more obvious it gets, generally speaking, you can run yourself into some trouble. So look, your little one's only 2 years old. So maybe you know about The Incredibles. I don't know. Maybe you know about it independently. But any interesting names that you may or may not be looking at related to a certain Incredibles character? Oh, I'm just thinking of their son, a certain fast runner.
I think you're over my head with that one. I missed that.
I wanted to see if you got. I know he's only 2. Dash.
Oh, that's nice. Yeah.
I'll tell. I'm gonna let you in on a secret because when you get to
yes.
when you
Okay.
once your
I
kids
got
get
you
old,
now. Sorry.
no, once your kids get to a certain age, the degree to which you are going to have these movies and shows in your head, it is like I've seen Frozen more times than, like, I'm a big Star Wars fan. Like, I've probably seen Frozen more times than I've seen like A New Hope, which is crazy to say, but it's actually true. But The Incredibles is a great, fantastic movie. But yeah, any individual names you're looking at there, Michael?
I know I get you now. This is it's Peppa Pig right now. I think I've probably seen every episode of that probably 3 or 4 times. I swear I'm going to bring him on one day. He's going to have a British accent. It will just be just from watching it so much. But
Hold on a second.
yeah.
Wait a minute. Everybody here just heard Michael say that we're going to hear British action from his little one. Please do. It'll be a heck of a lot of fun. You might as well.
A viral hit. We'd get a lot of views on that one, I'm sure. But yeah, DoorDash is really interesting. I got it up on the screen here. Just like the S&P 500, you can note these little flags that I have showing that, hey, we broke out of this range, and this kind of $92, $93 area was pretty huge. Back in 2023, we ticked it and we got this really nasty kind of topping tail candle, just completely fell apart off it. We hit it again after earnings and fell apart off it again. But now we're through it and we're just kind of consolidating sideways for a few days. And we're actually testing that from the other side. And that's technical analysis called polarity. It is my personal favorite trade is when a support area becomes a resistance area and vice versa. So this is one I'm actually watching really strong going into tomorrow. Earnings are completely out of the way, so you don't have to worry about that. So all of that has been digested. And I think you've got a pretty clean level of, call it $93 to play off of. So if we get any kind of bullish action tomorrow, I'm going to be getting involved with Dash. Under 93, I think that's when it's going to be time to go.
I love that setup. And I'll tell you right now, when I started trading in 03, when I first made money, I was making money trading penny stocks. And outside of like back then noticing which market maker was the axe and sort of trading off the good market makers on your stock, that whole notion of resistance turning into support and vice versa, that was my trading career. Like, if not for that one particular, call it setup, call it fact, I'm not sitting here today. Like that, you notice one thing, and I absolutely love that on Dash.
Yeah, and I tell this to new traders all the time. If there is one place that you want to get started, I truly believe that's it, because you don't have to worry about any indicators, right? You're training your eye to identify support and resistance. You are necessarily trading with a trend, because if it is broken out and pulled back, it has to be in an uptrend. So it combines all of these good risk reward. You're trading with the trend, all of these things together. It works across literally all time frames. We have scans for it in Trade Ideas for weekly charts and daily charts down to 1 minute charts. We actually have a one that's got Sean's list of stocks that he normally trades on the 1 minute basis. For me, it's my favorite setup. It's what I go to every day. If I could only have one thing, if it's like they took all the other tools I have in my tool belt away, that's probably all I do all day.
Yeah, anyone that watches this show knows I'm going to agree with that 1,000% because I use it every single day. I'm always looking for, if I miss an initial move, well, how am I getting into a long trend? Pull back into previous resistance. That is the first place you got to go to. So, Michael, thank you for coming through. We look forward to. Obviously, we'll see you again at the end of the week here. We'll get you back on Friday. But thank you for stepping on through. Apparently, I'm running into the end of the day and haven't even done the roll call. But I'm glad that we got to expend our time with you because, hey, you want to listen to the people that are smarter than yourself that you can learn something from.
I don't know if I'd agree with that, but I always enjoy coming. I always enjoy just shooting the you know what about stocks.
Well, when Sean's not here, then I get to call it my show, which means I can say whatever I want. So when I give you the compliment, you have to take it. Thank you as always, Michael. We'll see you on Friday.
Talk to you then.
All right, everybody. So we are going to give a really quick rundown. I know it says we're finished. I don't really give a darn. We're going to do roll call anyways. So let's get on into it. Yeah, hit the, can I do this too? Deal with it. Deal with it, Fabian. I'm sorry, you got to say a little bit later. But yeah, quick little roll call for everyone out there. I see Monty saying thank you, Michael. Shout out to you. Ponzi Fonzie, what up? Bristol, what up? One brown chick, holla. Jacob as well. I'll get the chat up in here. There you go. It's on the screens. You guys can see it. Michael Pena, hey, Trader Forever. John Spruill, you were making jokes this afternoon in the show. Don't think I didn't notice that. It was hilarious. Success is inevitable. If you follow us, then hopefully that is true. The MVE, shout out to you. Zippy Zane, I saw you a couple times today. Shout out to you. Rich Naples, believe it. Better believe it. Howell Capital Trading. Shout out to you. Tony Price, as always. Bob Curran. CompuCare team. There's too many. Sailor Moon. Go Lions. One Pride. Okay. Go Bills, but go Lions too. We love everybody here. 5 foot. Okay, anyways, 5 foot long bong. Okay, you made me say it. You got me. You made me. I said it out loud. I read it. You deal. It is what it is. Michael Lloyd, God the Emperor. I love that name. It's a fun one too. Michael Lloyd, Raul, Soraya, the White Rider. We got too many people in here. 4L Taz, DK, Jacob, Rowboat, Zion Lala. Thank you very much, everybody. It's been an absolute blast. I do love filling in for the after show. By the way, I want to remind everybody, if you didn't check out episode 2 of the podcast, go ahead and do it. Every single week, we're giving you a new one. Sean did episode 1. If you haven't listened, listen to that. Episode 2. Episode 3 is going to be dropped this week, and that's going to be Sharif, and then we're just going to rotate on back through it. So we got everything for you guys. You're covered. You got the podcast, you got the live show, you got the after show, everything you need here at Trader TV Live. It's a great start to the week. Hopefully, everyone comes right back, rested, because more action starting tomorrow. You had the Zscaler earnings and a few more names for the rest of this week. Man, those retailers were hot. Let's see what they have in store for us tomorrow. See you then, guys.